get by. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the sand. And right now, I feel like 100 grand.
You are listening to Inspired Insider with your host, Dr. Jeremy Wise.
Dr. Jeremy Wise here, founder of InspiredInsider.com, where I talk with inspirational entrepreneurs and leaders. Today is no different. I have Ryan Watson of UpsourcedAccounting.com. And Ryan, before I formally introduce you, I always like to point out other episodes people should check out of the podcast. And there's two great episodes with Jason Swank. You know Jason too. He talked about how he built his agency to over 8 figures and then sold it. And then he has another one that he talks about. They're actually buying agencies. And so he talks about how they evaluate agencies and what they're looking for as far as purchasing them. Another great one was Todd Taskey, who basically also helps sell agencies, and he pairs an agency with private equity. And he has a Second Bite podcast. So he talks about how sometimes these owners make more on the second bite than they do on the first, depending on the growth. So those are great episodes, and check out more on InspiredInsider.com. And this episode is brought to you by Rise25. At Rise25, we help businesses give to and connect to their dream 100 relationships. And how do we do that? We actually help you run your podcast. We are an easy button for a company to launch and run their podcast. We do the strategy, the accountability, and the full execution. So you could just show up, build the relationship, and run your company. So, for me, Ryan, the number one thing in my life is relationships, and I'm always looking at ways to give to my best relationships. And I found no better way to do that than over the past decade, profile the people and companies I most admire and share with the world what they're working on. So if you've thought about podcasting, you should. If you have questions, go to rise25.com. Happy to help. And without further ado, we have Ryan Watson. He's an experienced operations and finance leader for creative agencies and venture-funded startups. And as a partner at Upsourced Accounting, he helps scaling agencies. And he helps them build better plans, see the future, and drive profits. Like, what else do people want, right? I mean, that's really what they want.
That's what I keep hearing.
And so prior to Upsourced, Ryan actually led operations and finance for a large influencer marketing and ad agency. And this is where they built the team to over 50 and 10 million in annual revenue. And before selling to Quotient Technology, which is a publicly traded company, that was in 2018. So Ryan, thanks for joining me.
Jeremy, thanks for having me. I'm excited. It's going to be fun.
So just tell us a little bit more about Upsourced Accounting and what you do.
Yes, happy to. Yeah, so if I only had 5 words, I guess I would describe us as an accounting firm for creative agencies. I would say accounting firm's a little bit of a misnomer, though, in that we don't focus on the things that traditional accounting firms often do, like compliance work, filing your tax returns, doing audits, things like that. Where we focus, we like to call ourselves future-focused financial strategists. And so where we focus is predominantly on the CFO services. And that's really kind of 2 buckets. One being let's create the operational mechanism to be able to create data, financial and non-financial, so we can make decisions. And the second piece is joining your leadership team hip to hip as your CFO, so that we can help you interpret that data and make decisions. So that's what we do. We've been doing it for the better part of a decade, got a couple of offices, a couple dozen people, and we work with just over 100 creative agencies across the country.
Love it. I want to break this down a little bit because, as far as you mentioned the services and you kind of, I guess I put them in different buckets. I don't know how you put them, but there's kind of a CFO level service to it. There's a financial strategy level service to it. And there's an accounting level service. So do people come in and it's all in one, or do people come in and I just want this piece?
Well, it really depends, right? It definitely depends on what the problems of the agency are and what their maturity is. And so, we have a number of it, so let me say that we work with agencies roughly from $1 million in revenue to call it 30+ million in revenue. And on the lower end, let's say 1 to 3 million in revenue, often there is not a finance person, right? The previous person was either an owner or it was an internal bookkeeper. And so we'll come in and often we'll do both, right? So we'll handle what I would call the accounting, which is the month end close. We're gonna generate your financial statements. We're gonna reconcile your bank accounts. We're gonna pay your bills. And we're gonna create financial reports that we can use. And then the other half of that, the financial strategy and CFO services, that's where we're gonna take those financial statements and we're gonna add context and meaning to them. Right? We're going to do that through a KPI dashboard. We're going to do it through long range forecasting and budgeting. And so, I mean, to answer your question, some of our clients, certainly some of our larger clients, will already have the accountings handled and they just want the CFO services. They just want that context and meeting. Others will come in and they'll need both. And very occasionally we'll come in and we'll just do the operational piece. We'll just create the financial statements and we'll partner with an internal CFO. So we're happy to do any of those three scenarios.
I want to go through this a little bit. And if people are watching the video, I'm just showing the upsourcedaccounting.com page and you can look at some of the services. But, when you
I'm
were
wearing
at
the same sweatshirt.
What's that?
So I'm wearing the same sweatshirt.
You have 5 of them, one for every day.
I do. It's like I'm Mark Zuckerberg. I've just got a wall of the same sweatshirt. Anyways, go ahead.
So, with the company that sold, that you worked at, under the CFO services, I'm just going to pull out exit strategies. So let's talk about some of the exit strategies.
Yeah, great question. So, look, I mean, there are a few. Certainly, there's selling your agency, and that can look like a couple of different things. One looks like a sale to traditional agency holding company. Another looks similar but slightly different, which is sale to like private equity or a strategic fund buyer. Then there's selling to your employees and forming an ESOP plan, which is growing in steam a little bit lately. I think that's a little bit more of a popular. What's that?
Why do you
Good question. I think that it's a combination of just like awareness of the product, but also, and quite frankly, maybe this is just a biased view, but we're seeing the next generation of agency owner that we are working with is a little bit more interested in bringing everyone along for the ride, if that makes sense. I'm feeling we're having a lot more conversations about incentive comp plans, phantom equity plans, or ESOPs, different ways for employees to get more upside in the collective success. I just feel like we're having those conversations more this year than we did 10 years ago. Again, I think it's a little bit of just the sort of collective zeitgeist and what is important to business owners, but I love it. I'm happy about it. This is where we enjoy. But this is some of the work that we enjoy doing the most. So anyways, ESOPs is an increasingly popular option, which is right for some and wrong for some. And there's definitely there are pros and cons. So I'm not here advocating for it, but it is an option. And then of course there's traditional succession plans. So I'm going to bring in future owners who are going to buy me out, sort of a more traditional succession plan. And then, of course, there's like family and other similar but different succession. So anyways, there's a variety of options, and all of that to say, we like to have this conversation early. So even if you're an agency that's only like $1 million and you're not really in a position to go market yourself for sale, making sure that we at least understand what our current thinking is, which by the way might evolve, what our current thinking is in terms of what are we trying to do here? What's the goal of this business? Where do we want this to end up? Is really important for your decision-making, for our ability to help you with your decision-making. So this concept really underpins every one of our engagements.
What do you find makes an agency more sellable? Because you're seeing, all the skeletons, right? People can say, "Oh, I'm doing this or that," but you're seeing their financials.
Totally. Great question. So there's some very objective things that look like revenue, they look like growth, and they look like EBITDA or profit, right? So these are qualifiers, these are more binary considerations. So under a certain level of profit, under a certain level of revenue, it becomes quite difficult just to market your agency. Like we might talk a little bit about like the stages of growth, but if you're under, if you're under 3 million in revenue for sure, that's not necessarily a repeatable business that lives discreetly, separately from the owners, and that's hard to sell, right? And so, there's some binary kind of qualifiers. And then from there are a variety of things that makes an agency more or less attractive. Things like having a very specific niche offering, or a clear messaging in the marketplace, a clear right to win in their space. That's helpful. Having good repeatable revenue generation with long-term clients that have like a good long-term value. That's very helpful. Not having concentration risk. So, being able to say like, we've got a broad base of clients that again, live discreetly separately from the personal relationships of the owners. That's obviously helpful. Having a good team in place that can exist once the agency owner departs. That's obviously helpful. Growth rate, again. So I could probably keep going, but things that are somewhat intuitive in terms of like, is this, if I'm buying an agency outside of just, does this meet my size profile? Is the juice worth the squeeze for me to go ahead and do this? I'm looking for the things that make a good business that is repeatable and lives separately from the owner, because that's the number one risk, is that they have key man risk. I'm trying to buy a business, not somebody else's job.
Yeah, love it. Thanks, Ryan. You experienced this firsthand.
I did.
When the agency sold to a publicly traded company. What were some of the lessons from that process that you observed?
That's a really good question. So I would say, let's say there are a couple things. So one lesson was, our ultimate sale, and now sitting in this chair, many other ultimate sales, these things don't happen overnight, right? So it's not like you wake up one day and you think, I'm going to go sell my business and I'm going to hire an investment banker and they're just going to shop me around. Now, for the right kind of agency, that's possible. It absolutely can happen. But often it happens through a relationship that has developed over a relatively long period of time, right? So in our case, the buyer of our agency, we met at a trade show in our very specific space, let's say 36 months prior to the actually executing the sale. And so that was, and by the way, as we were entertaining, as we were working through that offer, we had a bank and we did entertain some inbound offers, but while there's plenty of people who are interested in like having a conversation, looking under the hood, to actually make the purchase decision, in my experience, often requires a longer term relationship. That was a big learning for me. I would say, one of the other learnings, this isn't a learning as much as a thing that I assumed that is really important, is selling your agency is a very, very, very time consuming thing. It is, it took us, I'd say our goal was to create a land speed record for getting through like the due diligence and sale process. And it still took us from like January to May to actually get it done. And so it is, and the agency partners and owners are going to be the people that are the most involved. And there is a high degree of risk that when you take your eye off the ball of running your agency and you devote it towards going through a sale, things in the agency could decline over that 4 or 5 year period, particularly sales. So it's really important that before going into a sale process, you have a plan for how you're going to run the sale process, and that you have a plan for how you're going to sustain whatever the trajectory of growth and whatever the quality of service, because nothing kills a deal more than negative momentum in the business. And I've seen it firsthand happen. Best case scenario, margin or the multiple gets compressed. Worst case scenario, the whole deal dies. So that is very important. Have a very clear plan. And I think similar to the very clear plan is just really devoting some time ahead of time to like building a deal room, getting your legal docs in order. The amount of information that you've got to provide is just a truckload for it. It's enormous. And you're going to be asked questions around HR docs that you might not have thought about a lot. So again, just a big like preparation. I think all these learnings were related to the maybe key theme, which is preparation is really important, and thinking about this well in advance is really important. You're not going to wake up one day and say, "Oh, we're going to sell our agency," and like that's going to happen next month. Not going to happen. It'll backfire. So these are long processes, but the outcome's obviously very important. So it's worth it. If that's what you want, it's worth it. But you've got to do it with intention.
Ryan, I'm curious at what point companies call you. I could see at one point, maybe they're exiting and they want to get stuff in order. So I could see that being a point where like, okay, we need to professionalize this. What are all the different kind of entry points that people are calling you at?
Totally. Yeah. Great question. Yeah. So I think that I think most of our clients would agree, there are inflection points in a business, right? And we get called at inflection points, right? And these inflection points more or less they coincide with how we think about agency personas and the sort of needs and opportunities with them, right? So just quickly, like we like to bucket agencies into a couple of like 4 buckets, right? These are stages of their life cycle. The first stage is building your agency, 0 to 1 million in revenue. You're putting the thing on your back and you're trying to get it to succeed at all costs, right? So that's 0 to 1. Then you've got the sort of building the agency. Hey, congrats, it exists, but it's really just a job for the owner or partners. And so from the building the agency, 1 to 3 million in revenue, the goal is like, how do I now create a sustainable business that generates an adequate level of gross margin and net profit? And ultimately exit that stage with some form of repeatable revenue growth. And so then that gets us to the third stage. So at the 3 million, you start to enter the growing your agency, right? And so at 3 to 4 million, things start to break. And everything gets harder because you or your partners kind of controlled all the decisions and managed all the processes. And that's not going to work anymore, right? You need a deputy of leaders to come in and assume the growth and owner the machinery of what is running the business. And that's really hard. And that's kind of the growing your agency, which kind of takes you to the 8 to 10 million. And at that stage, now you're like a big business and you got to make the choice. Do I want to be a really big business? And that's kind of the scaling your agency. So there's kind of those 4 inflection points. And at each inflection point, that's often a point where an agency says, whoa, what got me here won't get me there. I need some help. I've got to level up, and we get a call.
Makes sense. I wanted to kind of talk a little bit through each of those stages for a second. And when I was looking at, the financial strategy piece, again, people are watching the video, there's, the KPIs, the KPI dashboard reporting, forecasting. Totally. Talk about some of the KPIs people should think about. I know it depends on the stage.
Yeah. Yes. So it's very simple for me to say, oh yeah, it totally depends. And again, that's like it's a soapbox thing that I often get on. Like people love to talk about, hey, here are these 10 KPIs. You should look at all of them. And our point of view is like, actually, depending on where your stage is, probably only like 1 or 3 that really matter for you. And especially for the sort of first 2 stages, let's say you're creating your agency and then you're building your agency, that 0 to 3 million comprises kind of those 2 stages. I like to think about those, or we like to think about those KPIs in a hierarchy of needs, right? And so I can't think about a particular KPI. I can't think about the next hierarchy of need until I have satisfied the prior one. I can't think about self-actualization until I have shelter, right? And so the hierarchy of needs that we often run businesses through kind of goes like this. The first is solvency. Like, can I pay my bills? Can I keep this business open? Can we make payroll next week and the month after? Yes or no? If I'm not solvent, then like net profit margin, who cares? That's such a Cadillac problem. We're just trying to stay in business. So solvency is the first question. And then the second is like, okay, I'm solvent. Am I earning profit on a project basis? Like, am I earning gross margin, right? If I'm not earning gross margin, again, none of the other stuff after that matters. So am I earning some gross profit? Okay, once I've decided, yes, on a project basis, we are making money. The next is like, do I have reserves? Do I have enough cash in the bank to sustain the ebbs and flows that are endemic to like project-based revenue? Yes or no? Because that's the next priority. Once I've got like reserves, I'm making project level profitability, then I can focus on getting an adequate net margin, and the the net operating profit margin is the sort of next area and next kind of bucket of KPIs. And that's really, once I've done the first 3, that's easy. And once I've done that last piece, I'm profitable as an agency. Like, I'm putting money in my own personal coffers. I'm putting agency money in its coffers. Then the final, so the self-actualization piece is repeatable revenue growth. Can I have predictable revenue? Can I predict my growth rate with some degree of confidence? So anyways, those are now some of those areas aren't specific KPIs. We could get into the weeds on them, but like we like to look at the hierarchy of needs and say, okay, you're here, you're not solvent. Let's look at just your cash balance and your runway. That's it. Those are the KPIs. Nothing else matters. So that's how we think about KPIs.
I've heard varying thoughts on this. I'm curious of your thought as far as reserves go, because you mentioned that. How much reserve? I don't know. Have you determined months? So like, what are some of the things people should think about?
Yeah. So we use 3 months as like our standard rule of thumb. 3 months of operating expenses. So don't sell another dime of bookings. I don't sell another dime of work. Can I, with the cash on hand or the current, cash plus some receivables I have a high degree of confidence of collecting, can I keep this business open for the next 3 months? However, that's such a, that rule of thumb can change based on certain factors, right? So like if I have a high degree of unpredictability or really chunky cash flow or low visibility into my pipeline, I might want to keep more. And if it's the opposite, where I'm in I got a retainer-based business, I've got credit cards on file, I have a high degree of predictability, then as an ownership, I might be more willing to distribute more of the profits and leave less of the money in the business because it's not necessary. So yeah, that we kind of flex up or flex down. So, but 3 months is kind of like our standard rule of thumb, absent, other info.
Yeah. Right. I want to talk and get a little granular with the different phases, and maybe we can talk about some scenarios, and then we can get into the weeds with some of the KPIs there. But let's say I know you've dealt with agencies coming to you, they're struggling to even make payroll. So we'll start in like that phase,
solvency phase. Yeah.
So there was one in particular I know that they came to you in that situation. Yeah. What did you do?
Yeah, this was pretty recent, right? And so this was a somewhat recent client had come to us after having unfortunately lost a few important retainer clients and was just feeling some headwinds in the market. I don't think, I'm sitting here on March 3rd. I don't think that's a completely rare emotion given the kind of economic uncertainty. So this agency owner was feeling that as well. And look, this owner, like so many, so I'm not shaming this behavior at all. I'm acknowledging it. That when things get bad, the reaction is, I'm going to worry about all the other stuff. Like I'm going to get infatuated with like my AP process or my expense reimbursement tool or my like operations workflowing, because like that's stuff I can control. And the really hard thing that actually matters is scary, and it's something that I can't control, right? So this agency, after having lost some of these retainer clients, had a solvency problem. I don't think realized to the degree that they had an insolvency problem. But the first thing we did, we run a client through the Maslow's hierarchy of needs, or the Upsourced hierarchy of needs. And, this business in specific had a really low runway, right? So given the current stage of the business and what we had line of sight to in the way of cash and receivables, we're looking at like less than 2 months of runway, closer to 1 month of runway. And those are alarm bells for us, right? And so we're hearing AP conversations. We're like, hey, stop the presses. Let's not worry about that right now, right? Let's worry about this one singular problem, which is how do we keep this agency alive? And in that case, there were a couple of solutions. The first is obviously revenue related, right? Like this is part of this problem, or part of the solution, sales generated. This particular agency had recently experimented with a different offering. And, the solution here was like, let's put that on ice for a second. Let's go back to selling what we know how to sell, because we got to carry ourselves out of this problem. So that was number one. Number two was, we've got to lighten our burn, right? Our runway is a month, and in part because we've got too much overhead. Unfortunately, sometimes overhead is a nasty word for people. And so we had to make some tough choices related to headcount. And so, look, we made those solutions, fast forward, and in the moment, those are never fun to hear. But this business, fast forward a couple of weeks, this business owner comes to us like proud as a peacock, like, hey, I took your advice. I did what I had to do. It was really hard. Like I lost a lot of sleep. But man, do I feel like a giant 2-ton weight was lifted off my shoulders. And I'm feeling good. Like, hey, I got this new client that just signed. I got a couple I feel really good about. And even without those things, like my runway just doubled because, I got a bunch of utilization sitting here. I didn't have work for these people. I've unfortunately had to let them go. And as much as I hate calling the loss of employees in some cases a success. Unfortunately, that is what businesses need in some cases. And that is a success when you find yourself in that creating phase. And in some cases, you're heading the wrong direction in the creating phase. And so again, the lesson there, like a lot of ours, is just unrelenting focus. Hey, forget about all this other stuff. We've got one thing that matters. It's your runway. We're going to fix it. And in this case, we did. You know, that was a happy ending.
There was another scenario, Ryan, where there was $1 million agency, but there wasn't a lot of profit there.
Yeah. So the $1 million, this is a very common archetype for it. And I like it because I have a lot of empathy for this. I've been this business owner, so I know it super well. But yeah, like the very classic archetype of an agency where they come to us and they got to $1 million, they've arrived, but this agency, she, you know, owned a job, right? She did not own a business. She owned a job, wasn't generating a lot of profit, saying, hey, how do we fix this, right? So we go through the hierarchy of needs. Business is solvent. That's good. Not earning. So the next hierarchy of needs is like project profit. We look at the gross margin. It's not great, right? So we start the conversation with just like, oh, well, let's look at the top 5 most profitable projects that you have. Let's look at the least 5 most profitable projects you have. Let's see what we can figure out here. So she brings me like her top 5 revenue, like top 5 billing clients, bottom 5 billing clients. And so I'm like, well, that's interesting information, but that's actually not what I meant. That's not what I asked for. I'm not looking for how much revenue we charge. I want to know how much profit we're making on each of these projects. Of course, we get like the blank stare, like, I don't know. I mean, I've got salaried employees, whatever. It's like, okay, got it. Well, let's figure this out, right? In this particular case, one of the solutions was, well, we don't have the data to answer that question. We're not tracking time. And this is a conversation that we have a lot. We're not like time tracking like gurus, but so often it's an important piece of information if you find yourself stuck at this stage of the hierarchy of needs. And so we said, okay, well, we need to track time so we know what the costs, what the hours are being put to each of these projects. So we know if we're making any money or not. So we implemented a tool, we built a process. We actually, in this case, got in front of the client and their team and helped them sell it in. Because a lot of times there's some negative feelings about the concept of time tracking, some big brother emotions. We just wanted to make sure it was clear what the motivation was and why this is actually helpful in many cases for the employees. And so got some buy-in, let it go for 4 months, right? We come back and say, all right, great. Now we've got some information. Let's figure out what's going on. And so if you've got a gross profit problem, by the way, you have one of 2 problems. There's 2 drivers of that. One driver is utilization. You've got service people that you're paying for, and they're not generating revenue for you. They're not doing enough work. Okay. So utilization is one problem, or rate per hour. Like you have a good utilization. They're doing a lot of billable work. It's just the realized rate on them is bad. So it's one of those 2 problems. So we use that data to say, which is it in this client? So in her case, utilization was good. We try to target like firm wide, including non-billable people, like 65, 70% utilization. She was over that. So we were good there. The next was rate per hour, and that story was much worse, right? So in her case, their rate per hour was like not even double the fully loaded cost rate of each of their employees, and that's just not going to get you, after accounting for unutilized time, that's not going to get you anywhere close to a gross margin of 50%. And so what we found was like, look, when we're proposing these, we look good. Like our cost rates are 3 to 4 times our billable rates, that what we expect to earn is like 3 to 4 times what the fully loaded cost rates were. Problem is, we just got a bunch of projects blowing scope, and we're not doing a great job of communicating that we're blowing scope. We're certainly not doing a good job of billing for that overage, and that's killing us. And by the way, the most common reason why gross margin is bad is this. So I'm not surprised. But like once we were able to identify that was the culprit, the solution's almost trivial, right? Like we have the data, we have to track it. We create a feedback loop to identify when we're approaching sort of the budgeted hours on a particular project. And we have conversation with our client on whether we want to rein it in or we want to bill over. And in both cases, we can keep our margin there. And I can tell you that this is an ongoing solution for a relatively recent client, but we've already seen gross margin tick over kind of like our low watermark for them. And we're feeling great, right? Easy solution once you have the data, but getting the data is not always intuitive. And so I don't know, that was a good one. I love that. I feel good about that.
Yeah. I mean, sometimes clients don't even realize it, right? If we don't tell them.
Totally. Yeah. Yeah, none of it's, it's you don't know what you don't know. You know what I mean? None of this stuff that we do is like magic or mystical, right? But if you've not gone through it, like it's not intuitive.
Once someone has the data, so the data they need for like project profit, right?
Yep.
They need the hours tracked for, and how much they charged. Is there anything else you need to analyze the project profit?
Well, in a very traditional like service-based contract, branding agency, that's going to be pretty much it. It's just your costs are people and your revenue is what you're billing them.
Mm-hmm.
There's definitely some production work, some media work where you have the additional out-of-pocket costs. So like, for instance, in our influencer agency, we had media costs, we had content production costs, and we also, which were out of pocket, they were external costs. And we also had the hours. And so in some cases, when out-of-pocket costs or pass-through costs are substantial, having a good mechanism, and that's kind of the other like flag. Out-of-pocket costs, pass-through costs are probably the number one thing that agencies who come to us don't track well, and it dramatically distorts their picture of whether they're making money or not. If you have significant out-of-pocket costs, that's something that you really have to track and segment away well. So anyways, but that would be the other thing to add, the out-of-pockets. But yes, then the rest of it, you got it.
Ryan, time tracking software, and there's a lot of tools out there, but I don't know if you've seen a bunch of, like, what tools do you see people using that are good for that? Because I mean, if that's inaccurate, it kind of creates an inaccurate, totally outcome on the other end. Yeah.
So I'm I'll answer your question, which is I really like Harvest, but I also am I'm a firm believer in the idea that everybody thinks they have a software problem and everybody actually has a process problem. And so what I feel stronger about is like, I don't care if you do it in Google Sheets, if that's what you want. That's probably the best software that's ever been invented. But make sure that you're doing it every day, which I know feels like a lot, but like, oh my gosh, that we've read studies, and don't ask me to tell you what the result is because I can't think of it off the top of my head, but the percentage is dramatic, which is the degradation in like the quality of the data going from daily time tracking to weekly time tracking. So like, if this matters and you're really trying to solve a problem like she was, do it daily. And the other thing is like, time tracking should be everybody's problem, right? So if it's like, hey, team track time, but me, the owner, or this other person, we're not going to track time, like that creates a lot of resentment. It undermines the importance that you're trying to communicate. And so time tracking is a team sport. Do it every day and just choose something. But like we use Harvest here at Upsourced internally, and a lot of our clients use Harvest, and there's a bunch of tools that integrate with Harvest that are good for kind of capacity planning and that stuff. So
how long does that take you? So someone lumps on your desk, right? Hey, here's the data for this project, profit.
Yeah.
How long does that take to analyze typically for you?
Minutes.
Okay.
Minutes. Yeah. I mean, it's not hard at all, right? Like as long as like we've collected the data in a way that we can look at, right? Yeah. So, we look at our revenue and we can assign it to projects, which if the process is the way that we've helped set it up, very easy. It's already done. And again, the time tracking, if we've set it up properly, where we've got like the right codes.
There's big ifs there. You know what I mean? So I think like,
again, everybody's got a process problem, not a software problem. Like there's some, the best, right? Best tools, we're big fans of Parallax, for instance. Such a great tool. It's very powerful. And if we've ever seen any challenges with it, it's not a function of the software. It's that like it requires a really good process and somebody to own the heck out of to be successful. And that's the thing that falls apart. So anyways, you're right. If you've done it right, it's trivial. The analyzing can be automated. In most cases, we do automate it. However, if we don't have like a really good process that has good compliance, then the time is infinite.
Yeah. So
sideways
the next phase. So in the 3 million phase, what are some of the, I don't know if there's a scenario you want to walk through in the 3 million phase, and then some of the KPIs.
Yeah. So the 3 million phase is really interesting because again, I think like, when I think about the hierarchy of needs that I went through, solvency, project profit, reserves, net profit, and then like repeatable revenue growth. And that's kind of the capstone. That's really important. I'm throwing out these thresholds for each stage. But ultimately, like, you're not in the growing your agency phase, whether you're 3, 5, whatever, until you've nailed that top piece, the repeatable revenue growth. Once you're there, now you've got this, like, as I kind of alluded to before, you got this whole, it's a very interesting business, which is like, again, things start to break, and you cannot bear hug as a owner or partners all the things. Like, you need to have processes and systems that operate apart from you, where people are empowered to make decisions, and they know what decisions they need to make. And that requires a whole new set of challenges. I can tell you that we I just remember, because I lived it and it was so painful. I remember that phase at Ahalogy. This was the agency that I had sold. I very much remember the 3 million, and you also start to feel, because you're trying to bear hug everything, and that's not possible. You have mistakes start to happen in your work, but also, like, employees start to see more turnover. You start to see more, like, morale problems. And we definitely had that. We definitely had that. And I think,
why do you see more morale problems at that point?
What's that?
Why do you see more morale problems at that point?
Well, because I think, like, in the case of Ahalogy, I think there was a growing number of people who felt like their voices weren't being heard, because the people who are insisting on controlling the decisions are increasing layers away from the actual work being performed. And the further you get, the more friction there is. It just doesn't work. You got to empower people to, like, run. And we felt that. And I think, so one of the solutions for us was expanding the leadership team and really empowering these next level of leaders to own, with a high degree of autonomy, different pieces of the business, all the way to the P&L. And again, I'll just say, like, this wasn't necessarily as true at Ahalogy, but, like, I have this conversation a lot with agency owners who spend their nights and weekends and vacations agonizing over their businesses and decisions. They just think to themselves, like, oh my gosh, nobody's going to think of my business this way. They're not ready to be on leadership because they don't care like I care. Yeah, no kidding. Nobody will. Forget about that. Drop that. And that is an unreasonable bar. You need people who are good stewards of your business, and you need to lead. And by the way, those people often don't become the kind of steward of your business that you want them to be until after you promote them, and they get that feeling. So anyways, one of the key things that we did at Ahalogy is we leaned into that. We promoted a fresh round of leaders. And like I said, we exposed the P&L to them. So this leaders now had, as I mentioned at Ahalogy, we were an influencer agency. So we had media revenue, we had content production revenue, and we had some service revenue, and we had owners of each of these areas. And they now joined the leadership team, and they own P&L. Like, you got your margin report. We had monthly business reviews, and you were now empowered to present to the leadership group the results of your last quarter, or your last month rather, down to the P&L impact, the margin of each of your projects. And you got an opportunity to sort of celebrate the wins, but also propose solutions to margin problems or service problems. And I'm telling you, I mean, again, I do this for a living, but I was blown away at the kinds of solutions to problems I knew we had that I never would have thought about, because I was so many layers removed from how the sausage was being made, that once we empowered them to say, no, you own this, and it's your job to come up with a solution, their solutions were so much better. It's like, wow, we are a better company because you are now here, and here this whole time. It's like, are they going to, do they think about it as much as we do? Blah, blah, blah. No. In many cases, they're better leaders. And that was, in our case, a transformational decision. And we applied that decision in a bunch of other areas with regard to incentive comp and equity plans, and just different ways to say, oh my gosh, we need to empower and incentivize as many people to make the right decisions. And our job isn't to make the decisions, but it's to create the frameworks within which we want them to make the decisions. That's the whole game at the 3 to 10 million. That's it. That's the game. Anyways.
Really love that, Ryan. Quick question on that. So, at that stage, growing from a 1 to 3 and 3 and beyond, I find when I'm talking to people, it's a relatively flat organization, right?
Yeah.
And there's maybe different departments that need leaders. How do you prioritize that? And maybe in that agency, where did you plug in leaders first if you can't from a maybe a budgeting perspective, go, okay, we know we need 5 different leaders in these departments. I know in that company, where did you start plugging in leaders first? Or was there a prioritization there?
Yeah, it's an interesting question. I haven't thought about it, but I will answer you off the cuff. I guess we had a mentality around hiring in general, which is we hire when it hurts, right? As opposed to we're going to hire in anticipation of pain. Let's be ready for this. We're going to get to this phase. We're going to need this leader. Let's get them in place now. Like, that's such a fallacy. Like, you need them so much slower than you think you do. Hire when it hurts. And so some of our work, some of our media work was operationally more complicated, and the impact to margin was higher. Like the volatility was much greater. So we leaned in there maybe a little bit earlier, but it was through the lens of like hire where it hurts. And so we hired where it hurt. Yeah.
So I know we have a few more minutes, but I wanted to touch on the 8 to 10 million plus. And I know there's probably a wide degree of, variability with this group, but maybe talk about one case that sticks out and some of the KPIs that they were looking at this stage. Yeah.
So I guess what I will say is, like, once you get kind of in that growing / scaling, the latter two, now the KPIs don't dramatically change. Like, the biggest difference between in that prior bucket that we were talking about, the growing phase, is you're using a lot of the same profitability based KPIs, but you are now disaggregating them to individual owners. You're creating more ownership through more granular KPIs that ladder up to the company level. So departments, revenue model, or product lines, whatever it is. Once you're in the 10, it's not going to change a dramatic amount in terms of like how you're evaluating it. But what I do think is the game at the 10 million is now more about, like, you've decided that you want to be a really big business. You also need to decide like why and what, like, to what end. And so I'd say a lot of it ends up being like you are starting to add very specialized skill sets. And you're also growing in different ways. So like, this is where, while we always talk about exit planning and M&A as like a potential piece of the strategy, this is where it actually becomes really relevant. So we find our agencies that are at the 10 million mark are either laser focused on getting acquired or laser focused on acquiring others, growing through inorganic growth in addition to organic growth. And so a lot of the discussion ends up being very specific to one of those two paths. But as you said, those are unique snowflakes, because it's just, in my experience, we have a lot of agencies who exist because they want to do great work with friends. Like, they just love, they're creatives because they're creative. They cannot imagine doing anything else. And it just sounds like a lot more fun to do it with friends in an organization they've built than to do it otherwise. And we love that. And that motivation doesn't necessarily lend itself perfectly to, I want to go grow a $50 million agency. Many of our agencies don't want to do that. So we found a lot of people who, like, it's just a lot less stressful to run a growing agency, 3 to 10 million. And so that is almost always a goal for people. But over the 10, very discretionary. We've got a lot of folks who just don't want to do it.
Love it. First of all, Ryan, I'm going to be the first one to thank you. This has been tremendously valuable, and
I appreciate it. It's been fun.
And I want to point people to check out upsourcedaccounting.com to learn more and more episodes of the podcast. So thank you so much for joining me, and thanks everyone.
Thanks.
What I got, you can't buy. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the sand. And right now, I feel like $100 grand.